Okay, second chapter under MAF251 is standard costing and variance analysis. So what is standard costing? Okay, standard costing and standard cost. Okay, standard cost is predetermined costs that are calculated in advance of actual production based on specifications of all relevant factors. Predetermined, that means you estimate the cost in advance before you produce the product based on what? Based on specification of all relevant factors. So what are the factors to produce the product? Material, labor, overhead, and so on. Okay, so what is standard costing? Standard costing is the method of ascertaining standard cost of product and services. So it involves with the comparing standard cost with actual cost. So when we compare the standard cost and actual cost, this is standard costing. Okay, so there are four types of standard cost. Okay, the first one is idle standard. So idle standard based on perfect operation condition have an unfavorable motivational impact. So if we based on perfect operation conditions such as okay to produce the product you said that okay one unit of the product you need one kg of metal, you assume that the material does not have any damages. So no losses for material. Same goes to labor. So you estimate one unit of product can be produced but within 1 hour without considering whether the labor is a new workers or experienced workers. Okay, so you based on perfect operation condition. But these have an unfavorable motivational impact, especially to the new workers where they have no experience. So sometimes, okay, the either standard uh, is the perfect operation. That means they have unmotivational impact to them because they cannot meet the target since the target is too high to them. Okay. Number two is expected standard. So to overcome unfavorable motivational impact, so the company may introduce expected standard. So expected standard is based on normal operation condition. So this standard useful psychological incentive, more realistic and challenging target of efficiency. So when they set the standard, so they based on normal operation, take into consideration about the loss. Okay, example when you produce the product that have using the method that quite fragile, so sometimes there are damages of material, so you expected the loss of material, and then you expected about the learning process of the new workers. So the first time they do the work, maybe they do at the lower pace. So you base on normal operation, you assume that sometimes the labor is not well to come to work. There is absenteeism, okay, when this situation happen. Okay, number three is current standard. So current standard is based on current working condition. Okay, let's say your estimate, okay, the company start commencement on 2018. So in 2018, you assume that okay, 1 hour to produce one unit within 1 hour. So you pay RM, okay, let's say 10 ringgit per hour. So when you want to produce the standard, okay, for 2019, you based on the current working condition. That means you based on 2018. So the cost of labor is 10 ringgit. Okay, based on current situation, but there is disadvantage. That means do not attempt to improve on current levels of efficiency. So you means that you assume that the workers do not improve even though they have worked for 1 year. Okay, so they still produce one unit within 1 hour. So it means you have to pay them 10 ringgit one unit within 1 hour, no improvement. Okay. basic standard. So basic standard is kept unaltered over a long period of time. Okay, may be outdated. Okay, when it comes actually basic standard, okay, comes from the current standard. In 2020, you assume you based on the current situation, so you assume only one unit for 1 hour also. So it's also 10 ringgit. So 2021 also you assume the same thing because you based on the current situation. Actually, this 2010-21 is based on 2018, which is kept unaltered for a long period of time. So maybe the cost of labor at this time is not 10 ringgit anymore because you based on the standard that do not alter for a long period of time. So the standard is outdated. So this is standards. Okay. So from the four standards here, the most appropriate standard to be used is the most suitable will be expected standard. So expected standard, sometimes we call it attainable standard, attainable or achievable. Okay, achievable standard. So the it means the same thing. Okay, advantages of standard costing. So what is standard costing? Okay, advantages of standard costing. The first one, help managers to focus on important issue. When we compare the actual and standard, sometimes there is difference. So the difference here is something that the manager should focus on because sometimes what you target you do not achieve. And then number two, carefully planned standards are aid to more accurate planning. When you set a standard for one unit of the product, so you can plan, you can budget for the future. Your budget is more accurate. Okay, number three, facilitate comparisons actual performance with standard. When you estimate is standard and then at the end of the period you get the actual cost or actual revenue, so you can compare to get the you can analyze the performance. And then the next one, setting a standards will require looking at methods and operations. In order to produce the product, you have to list down what are the costs that you have to use in order to produce the product. Let's say in process one, what are the types of material until the product the process of the product finish. So you look into the methods or the methods of producing the product from process one until the end of the process until finished goods. And then management, the next one, management can delegate responsibilities. So to set the standard, let's say for material price, so they can set the responsibility to the purchasing department. Okay, so each department will have their responsibility. So the management delegate responsibility for each of the department or particular person. And then develop cost consciousness. Okay, when we set the target, when we set the standard, let's say example just now is purchase department. So when we set the standard purchase cost of material, one unit is 10 ringgit. So they have to find out the supplier that can give the price 10 ringgit per unit. So in case you have the cost consciousness developed in the company among the employees. Okay, and then provides measure of the performance of individual manager. Let's say when you set the target, okay, sales, okay, you set, target is 1,000 unit for 1 week to achieve. So the sales department should sell 1,000 1 week. So when we compare to the actual, okay, let's say actual is only 900 units, okay, sold by the sales department. It shows that the performance of the sales department is not good because they do not achieve the target. So it's measure the performance of individual manager in sales department. Same goes to other department. Okay, persons involved in setting the standard. Who are persons that involved in setting the standard? Okay, normally, okay, management accountant will be the head to uh, who are involved in producing the standard. Okay, normally it will come from various departments. So production planner, okay, because they are the one who plan how to produce the product. They know the details of the processing. Okay, and then the designers, okay, they design the product, so they know the product details better. And then personnel manager involved with what? With the human, that means with the labor standard, how much per hour that you have to pay for this type of labor, for this type of labor. And then production engineers is about the machine hours. Okay, they will know, okay, about the machine in the departments in the manufacturing better. Okay, and then we can also have the sales manager, okay, to set the target of standard sales selling price. Okay, we have purchase manager, okay, purchase manager who set the the quantity of material, the quality of material to be used, okay, how much the price of material, and so on. There are many person who involved in setting the standard. Okay, when they set the standards, okay, this standard cannot be used for a long period of time. So if we use a long period of time, we refer to as a basic standard. So just now we said the best method, the best standard uh, is achievable standard, attainable standard, or expected standard. So that's why the standard should be revised. So the revisions of standard. So when we should revise the standard, if we do not have anything, normally the standard should be revised once a year. But if there is sudden change in economic, even though it does not 1 year yet, okay, you have to revise the standard. So sudden, when there is sudden change in economic circumstances, example of increase petrol price in in the rate, the rate of increase is very high. So it will affect other factors such as transportation costs. So when the transportation costs affected, it will affect the price of material, the price of the product. So it will affect changes in economy. So we have to revise the standard. Okay, standard cost card. So what is standard cost card? So standard cost card is a document that we record, okay, the detail of standard cost for a unit of a batch of the product. So if we produce shirt, so that means standard cost card, we record the cost for 1 unit of shirt. If you produce oil, so the standard cost card will record of producing 1 liter of oil. So it depends on the cost unit of the product. Okay, so if you have two types of the product, so you have to prepare separate standard cost card. So if one product, one standard cost card. If two products, you should have two standard cost cards separately. So the importance of standard cost card, as we said just now, revision of the standard. So when we revise the standard, we can refer to the standard cost card. And then when we have uncompleted product during the period, that means value of work progress. So we can use the standard cost card to value work in progress. If we have finished goods, so we can use the information in the standard cost card to evaluate the cost of goods sold for the finished goods. Okay, so this is example of standard cost card. Okay, let's say we produce product double A, so you should have the name of the product. So in this case, the name is double A. How many quantity? Okay, 1 liter. So 1 here. So standard cost card is for 1 unit of the product. Either it depends on the quantity of the product, liter, okay, meters, unit, kg, and so on. To produce double A, we have two types of material, raw material A, raw material B. So we have to record three things: standard quantity, standard price, standard cost. Okay, the three column here. So to produce double A, we need raw material A 10 kg. 1 kg of A is 2 ringgit. So to produce 1 liter of double A, standard cost will be 20 ringgit. 10 times 2. Same goes to B. You need 5 liters of B to produce 1 liter of double A. So 1 liter is 2 ringgit. So you have 10 ringgit per liter of double A. Okay, labor grade 1. So you need 2 hours to produce the product. So 1 hour you pay 5 ringgit. So 10 ringgit for 1 liter of double A. Okay, labor grade 2, 4 hours. Okay, 3 ringgit per hour. So you have 12 ringgit per liter. So standard cost here is for 1 liter. Okay, standard price is referred to standard quantity. 2 ringgit per kg, 2 ringgit per liter, 5 ringgit per hour, 3 ringgit per hour. So now we go to variable overhead. So overhead we have many methods. So under standard costing we use only either direct labor hours or number of unit produced. So in this case we use direct labor hours. So how many labor hours that we have? 2 hours for grade 1, 4 hours for grade 2. So 6 hours here. Okay, this is OAR that we calculate in topic overhead. So OAR for 1 hour of variable overhead is 1 ringgit. So 1 times 6 is 6. Same goes to fixed production overhead. Okay, we use labor hours as a basis. So 6 hours. So OAR, okay, for fixed overhead is 50 cents. So 50 cents times 6 hours, so we get 3 ringgit. So if the question do not give OAR, you have to calculate OAR based on the basis used. So if this is hour, OAR per hour. If this is unit, liters mean here liters. Okay, so this is per liter. Okay, then you total up. Okay, you get here total production cost 61. Okay, plus other overheads, admin, selling, distribution, if any, 24. So you get total cost, standard cost. Okay, standard total cost. Okay, then standard selling price is 100 ringgit. So you get standard net profit 15 ringgit. Okay, thank you.